Inflation. It's the silent thief of your wealth. You don't see it. You don't hear it. But it quietly eats away at your money every single day. And in 2025, inflation isn't just a number on a government report. It's a financial reality that's reshaping how we all invest. Prices are higher than ever before. Groceries, housing, and energy costs have all surged. Central banks around the world are struggling to balance interest rates with economic growth. And investors everywhere are asking the same question: how do you protect your money when everything is getting more expensive? The truth is, inflation doesn't destroy wealth equally. Some people lose, while others actually make a fortune during high inflation. The difference comes down to how you invest. If you are holding cash, you are losing purchasing power every day. But if you are holding assets that grow faster than inflation, you can come out far ahead. Inflation isn't just about rising prices, it's the decline in the value of your money. $1 today buys you less than it did yesterday. So your goal isn't just to make money, it's to beat inflation. If inflation is running at 5% and your investments return 3%, you are actually losing 2% in real terms. That's why smart investing during inflation is about finding assets that appreciate faster than the rate of inflation itself. Real estate is one of the most popular inflation hedges. Why? Because real estate tends to move with inflation. As prices rise, property values and rents usually rise too. Owning real assets means you own something tangible, something that can't be printed or devalued by central banks. In the year 2025, investors are focusing on income-producing properties like rentals, commercial spaces, and multifamily units. These not only increase in value but also provide steady cash flow that adjusts with inflation. Smart investors are also using fixed-rate mortgages to lock in cheap money. So while rents and property values go up, their payments stay the same. That's how you make inflation work for you, not against you. Another smart hedge against inflation is commodities. Gold, silver, oil, and agricultural goods tend to rise when the value of money falls. Gold especially has been a classic inflation hedge for centuries. It doesn't pay interest, but it holds intrinsic value. In uncertain times, investors trust gold more than paper money. Silver is another great option since it is both an industrial and precious metal. And in 2025, with the global energy transition accelerating, commodities like lithium, copper, and nickel are becoming the new gold for investors. But inflation doesn't just hit commodities, it changes how the entire stock market behaves. During high inflation, growth stocks often struggle because their future earnings are worth less in today's dollars. Investors start moving toward value stocks, companies with strong cash flows, low debt, and essential products. Think energy companies, utilities, consumer staples, and financial institutions. These businesses can raise prices without losing customers. They pass the inflation costs to consumers and protect their profits. For example, when inflation drives up food prices, companies like Coca-Cola, PepsiCo, or Procter & Gamble can increase prices slightly and still keep sales strong. Their brand power keeps them profitable. That's why big investors buy defensive stocks during inflation. They offer stability and consistent dividends. Dividend-paying stocks are another powerful weapon during inflation. When prices rise, regular income becomes even more valuable. And companies that consistently raise their dividends, known as dividend aristocrats, can actually help your income grow with inflation. Reinvesting those dividends compounds your returns faster. In 2025, dividend investing isn't just about safety, it's about smart compounding in a volatile economy. There's also a lesser-known but very effective inflation hedge, Treasury Inflation Protected Securities, or TIPS. These government bonds automatically adjust with inflation. When inflation rises, the value of these bonds goes up. They won't make you rich, but they will protect your purchasing power. For conservative investors, TIPS are like insurance against inflation. And for balanced portfolios, they add stability. However, not all inflation is bad news for stocks. Certain sectors, especially technology, can still thrive. Companies in AI, cybersecurity, and cloud computing with low debt and strong demand can perform well even when prices are high. That's because their value isn't tied to commodity prices, it's tied to innovation. In 2025, AI-driven companies helping businesses cut costs are growing fast. So while inflation hurts some industries, it creates opportunities in others. Smart investors spot these shifts early and ride the wave. Now, let's talk about crypto. Many people turn to Bitcoin and other cryptocurrencies as inflation hedges. The logic is simple. Governments can print more money, but Bitcoin has a fixed supply. In 2025, crypto remains a high-risk but potentially high-reward option. More institutions are adopting it, and blockchain technology continues to evolve. Still, it is important to balance your exposure. Crypto can skyrocket, but it can also crash overnight. Use it as a small part of your inflation hedge, not your entire portfolio. Another major opportunity during inflation is infrastructure investing. Governments are spending billions rebuilding transportation, energy grids, and public systems. That spending creates long-term demand for materials, equipment, and skilled labor. Investors who hold stocks in construction, engineering, and renewable energy companies can benefit directly. Inflation often leads to higher government spending, and infrastructure is one of the few sectors that can thrive in that environment. Diversification is also key in inflationary times. Not every country experiences inflation at the same level. Some nations have stronger currencies and better fiscal management. By investing globally, you can spread risk and tap into faster-growing economies. In 2025, many parts of Asia and Latin America are seeing strong growth, even as Western economies slow down. Smart investors are using global exchange-traded funds and emerging market funds to capture that upside. Real estate investment trusts are another great inflation play. They let you invest in real estate without owning property directly. Many REITs focus on commercial buildings, warehouses, or data centers, sectors that tend to perform well during inflation. Because rent contracts often rise with inflation, REIT investors enjoy increasing income streams. Plus, REITs pay out most of their profits as dividends, giving steady cash flow to investors. Another crucial move during inflation: reduce bad debt. Inflation can make interest payments more painful, especially if your debt has variable rates. Paying off high-interest debt, like credit cards, gives you a guaranteed return. Each dollar you save on interest is like earning a risk-free profit. On the other hand, keeping fixed-rate debt on appreciating assets like real estate can actually help you. As inflation rises, the real value of your debt falls over time. That's how you turn debt into a strategic advantage. Wealthy investors understand something most people do not. Money moves during inflation. It flows away from those holding cash to those holding appreciating assets. If you own assets that grow in value, inflation helps you. If you do not, it hurts you. That's why mindset matters just as much as investment strategy. You can't wait for inflation to disappear. You need to adapt. That's what separates average investors from smart ones. In 2025, the smartest investors focus on three things: preserving purchasing power, generating income, and owning scarce assets. Cash is losing value, so do not let it sit idle. Instead of keeping money in a low-interest savings account, move it into assets that outpace inflation, stocks, real estate, or productive businesses. Remember, own things that appreciate. Because ownership, not saving, builds true wealth. Even in inflationary times, diversification is your safety net. Never bet everything on one investment or one region. Spread your money across assets, sectors, and countries. That way, if one area struggles, another can thrive. Inflation can shift quickly, and diversification helps you stay balanced. Another powerful inflation strategy: invest in yourself. As the cost of living rises, high-income skills become more valuable. Learning skills in technology, finance, or entrepreneurship can boost your income far faster than inflation. Your ability to create value is your best hedge. In 2025, people who adapt and learn are the ones who get ahead financially. Wealthy investors also use asset-backed borrowing to grow during inflation. They borrow against appreciating assets like real estate or stocks at low interest rates. Then they reinvest that borrowed money in other appreciating assets. Because inflation reduces the real value of their debt, they are essentially paying it back with cheaper dollars. This strategy lets them use inflation as leverage to build even more wealth. Technology is also changing how we invest during inflation. AI-powered portfolio tools can now analyze real-time data and automatically adjust your investments. Robo-advisors help you rebalance portfolios based on inflation trends. And blockchain assets provide transparent access to alternatives like tokenized real estate and commodities. Smart investors in 2025 use tech to stay one step ahead. Inflation tests your financial mindset. It tests your patience, discipline, and understanding of real value. Those who panic and hoard cash lose. Those who stay informed, invested, and diversified win. Inflation separates spenders from owners, and owners always come out on top. The best investors in 2025 aren't chasing hype. They're building resilience. They own assets that generate real income. They hedge against risk. They stay focused on the long term. Because when inflation cools, those who stayed calm and strategic will be far wealthier than before. Inflation isn't your enemy, it's your teacher. It reminds you that money itself isn't wealth. True wealth comes from owning things that produce value even as prices rise. If you adapt and act now, inflation won't destroy your wealth, it will strengthen it. Every day you wait, inflation quietly takes a little more from you. But every smart move you make today, every asset you buy, every dollar of debt you eliminate, every skill you build, brings you closer to financial freedom. The world is changing fast, and those who adapt win. Be one of them. Take control of your money. Invest smartly. And let inflation work for you, not against you. If you found this helpful, don't forget to subscribe for more practical investing videos like this. Your financial future starts now, so take action today.